Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. We're coming to you live from Toronto at Consensus2025 by CoinDesk. Joining me for this segment, we have Andy Baehr, who's head of product and research at CoinDesk Indices, and we're here to discuss key themes at Consensus this year. Andy, it's great to have you as always. Honored to be here at Consensus since 2018. We've been covering this for quite some time now, yes. And it's always interesting to see how the themes evolve. I think the past 2 to 3 years, we've really started to see more structure and maturity in this space. But I think what's happened from 2024 to 2025, there's some discernible things to call out there.
It's been an incredible year for the industry. We were all consumed with Bitcoin ETFs 12 months ago. We didn't have options yet. We didn't have, it was pre-election. It was even a different time with respect to expectations for the Fed. So comparing last year to this year is you can't even realize you're in the same business. I think this year we're seeing a lot of tokenization talk, real world assets, the money market funds and the treasury funds, which have worked towards enhancing collateral for trading positions, have been successful. There's $4.5 billion now of tokenized money market and treasury assets. That's been an incredible change. So I just did a panel on real world assets with a real estate person, a DeFi lending protocol, somebody who wants to tokenize equities, and a last mile solution. Everybody is rushing into that space right now. So I think technology wise, that's definitely the biggest push I've seen this year.
Yeah, which is interesting because I did a crypto credit panel this morning, and again, that was around the tokenization of that asset class as well. And it almost sounds to me, as the capital markets continue to evolve, that tokenization is really going to be where your source of liquidity is going to be derived from.
Absolutely. It democratizes it. It allows you to create slices. It equalizes everybody's participation in credit quality. It helps with price discovery. It helps with valuation for loans. All these things are kind of fun. I mean, selfishly, I'm kind of happy, you should be too, right? That people who have backgrounds or are in the traditional space understand how all these things work and how creaky collateral management can be, how creaky settlement can be, how inconvenient weekends can be when things move a lot. And the idea that all of this could be washed away at the, I guess at the plumbing layer, not necessarily the UX layer, is pretty exciting. So it's definitely a much more financialized consensus than it might have been 2 years ago. But I think a lot of the picks and shovels work, to get things in place is being done now.
We're hearing a lot about stablecoins as well. It feels as if that's the bright spot in terms of where we're going to get some regulatory framework around. And I feel like that's what the industry needs. It's great. There's a lot of products that are happening right now, but once we get some sort of framework around some piece of the digital asset space, I think that's going to be a catalyst.
It's hopefully now the least controversial, although it's still somewhat politicized thing to get done. It would be a very interesting milestone in the regulatory kind of path. It would lead to, okay, I worked with this person on this, it got done, let's move on to the next thing. For me, and we've talked about this before on Trade Talks, that $250 billion of stable coins is very meaningful for people who don't have access to dollars for payments. We talked to the fellow who runs the program at PayPal, and for user experience and all that's great. But for investors who are thinking, I want to allocate to crypto, stablecoins don't really mean that much to me, except they all have to trade and settle on layer 1 blockchains. So does that mean that this is an Ethereum question, Solana, Sui, Avalanche? Is it a Stellar question? Like Ripple's involved? How can I merge this idea of growth in stablecoins with how I think about crypto assets beyond Bitcoin and how I want to allocate when I think about investing?
Yeah, well, I think it's interesting. We had Jose from PayPal on as well, and we discussed that as it relates to user experience, because to your point, we think about it in terms of trading, hedging, investing, and so forth. But many countries, developing countries, emerging markets, and so forth, they are using this in the absence of traditional legacy banking.
Absolutely.
So they're building microeconomies. They're looking at alternative forms of capital formation, cross-border payments. It's how they do commerce. And I think to be short-sighted with that, you're missing a massive market.
Absolutely. And it's good to see competition in there, which I think stable coins are such a conundrum now because they can't feature inherent yields, because that kind of messes up the architecture, and yet there is yield in the assets that back the stablecoin. So it's a business which kind of self-funds. More people are rushing to get in. We know that there will be some kind of reward layer on top of stablecoins at some point, but still, it's fascinating to see PayPal get involved and Ripple get involved and others get involved to say, like, what flavor can I put on this to make it more interesting or to add value for my customers? Of course, we still love it, and because we get to talk about the layer ones that support it, the layer ones and layer twos, and how that just keeps more transaction volume happening on various blockchains.
I think institutions are still learning what the plumbing is like as well. There are a lot of blockchains that are out there. Which ones are most appropriate for building capital markets infrastructure? What will go by the wayside? It's interesting. One of our guests on the show had said Ethereum kind of always gets a bad rap, but it's always standing at the end of the day. So there's so many choices out there that investors are trying to figure out what works.
Well, that brings up the question of token picking, and people were very excited about Solana last year. We had a panel this morning with Pascal Saint-Jean from 3iQ, who just launched a yield-bearing or a staking yield-bearing Solana ETF, which was funded by Skybridge, and Anthony Scaramucci was on that panel too. And so there was some warm vibes going on about that. And Solana is a very interesting blockchain. But for somebody, again, who's a 5%er who's thinking, well, I have some Bitcoin now, what else should I look into? And they've seen the struggle up until last week that Ethereum was having. They see Solana being extremely volatile. They see other blockchains. Then they see the service providers. Then they see the DeFi protocols, and they say, this is too much. It feels like 1999 when you didn't know which Nasdaq stock was going to go like this and which was going to go like that. What are the high quality names? Which are the cycle survivors? So a lot of what that panel ended up concluding was you really kind of, and of course self-serving, but you really want to have an index that rebalances, that will keep you in that top layer. And so even if you maybe weren't happy that you bought QQQ in 1999 before the tech bubble burst, well, a few years later, you were still glad that you had it. And there were names that dropped down that were less influential, like the Intels and the Ciscos, and the names that came up, like the Metas and the Googles and the NVIDIAs. You really kind of want to let your investment process be passive, but also be kind of refreshing, letting go of dead skin and kind of, rejuvenating itself. So we are sticking close to that idea that index investing now is a really, really interesting thing for people to spend time on.
And I know you've been traveling for quite some time. Any trends you can discern from the index? I mean, it's been a great couple of weeks for crypto overall.
It feels anecdotally like things move in quarters, right? The first quarter of last year, anticipating the Bitcoin ETFs, everything was off to the races. Then we had that long sideways summer, which was brutal with concerns about the election and the Fed. Then we had another ramp up between September 18th and December 18th. And then the first quarter of this year was really difficult, right? Bitcoin, as it has come to do, has led the way out. Bitcoin was what I call a tariff tantrum mooring, right? It really kind of stabilized during the worst of the April crisis and then shape shifted into this all-time high seeker and is right now close to, around 103,000 again all of a sudden. That has continued to ignite the rest of the market, right? And now you have CoinDesk 20 up 32-ish% in the last 30 days. CoinDesk 80, sort of a mid cap, up even more. Even our meme coin index has been up over 80% in the last month. So it did need that little spark of we're going again, everybody. We would like those to eventually detach, but for the moment, we'll take the positive momentum, which will remind folks that Bitcoin's a great place to be. But as these other assets start to take off and find their legs, it's going to be very important not to ignore them.
All right. Appreciate the insight as always, Andy. Thanks for joining us on Trade Talks. And thanks for joining me from Consensus. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.